Alright, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today, as you probably saw by the title, we are going to be going over journaling. I'm going to start by talking about my personal journal. You guys have seen this a million times in my YouTube videos. I'm going to explain how to fill it out and what different metrics mean, and then we're going to dive into the importance of journaling and why it is 100% mandatory for all of you traders out there watching. I know some may hate to hear it. I know some think it's tedious, but I promise you it is mandatory, and we are going to go into a case study at the very end, going over an actual student of mine's journal. We're going to look at it from my point of view and approach it as if it were my trading journal and the recommendations that I would have for it myself, aka him. But without further ado here, let's dive into my journal. We'll talk a little bit about it. Now, for starters, some of you may not know this, but I am back in school for my master's degree in data analytics, specifically in the finance sector, which is, of course, what we do here. It's something that everybody, hopefully watching this video, has an interest in, financial analytics, whether it's the foreign exchange or the stock market. You guys know I am heavily involved with it outside of my academics as well. And I cannot explain enough how much Excel I use in this program. I have used Excel since I was very young. I even am Microsoft certified. So I'm not here to flex that or anything, but what I am saying it for is to help you guys understand that this journal is nothing crazy. So if any of you do want to reach out, I will send it to you for completely free. But I just say that mainly so you guys understand this is extremely simple for an Excel document. I genuinely did make this in maybe 15 minutes or so. But without further ado, let's talk a little bit about these metrics across the top here. Now, for starters, account, this is just kind of something that I use for myself, Forex.com Live. Many of you may or may not know I use Forex.com as my regulated broker. My starting balance this year is essentially just the capital that I allocated into my trading account at the beginning of the year. Essentially, what I did from 2024 was cut a chunk of the profit that I took, obviously paid myself, put it in my pocket, delegated it a little bit into another business, as well as I took a big chunk of it and put it away in my stock market portfolio. And then, of course, the current balance here. Now, for full disclosure, I am not at this current account balance. I have been withdrawing as the year went on, taking periodic payouts. I've started to get a bit more used to quarterly withdrawals. It's something I prefer. It's not a huge chunk at once, but it's money that allows me to go and take that profit from my Forex account and delegate it to other places throughout the year, as opposed to just doing it one time at the end of the year. So yes, this would be the total account value if I continued compounding from the beginning of the year, but of course it is not the actual current value. Now, win-loss ratio, everybody here understands this one, but I'm sitting at about 38.64% this year, which is actually really good compared to my backtesting data. Of course, that is a compilation of the wins and losses that we have here. My total amount of wins is 34, my total amount of losses is 54. And these metrics are basically compiled off of column G here, which tells me how much profit I made per trade. Obviously, these lower value ones where it's around $62 or $137 or $87, these are what we consider break even. I do have an EA or a trade assistant that moves my break even a little bit above my entry level, so that's why I get a little bit of profit there. It's kind of meant to cover commissions and spread. And then, of course, we have the total percent gain for the year, assuming and knowing that I risk about 2%. So that 92% metric is based on about 49 RR, which we also have listed here, based on the RR column, of course. And then my total account gain, of course, if you take these two values and add them together, that is what you're going to get that current balance. And then the total RR with no break even. Now, this is a common and even controversial rule. Some of my students use it, some do not, and I really do think it depends on your actual trading style. But nonetheless, that is the main metrics that you're going to see up here. And when you do get this journal, the main pieces you're going to have to fill in is obviously your pair and your date. You're going to put your risk percent in there, your RR, and then my percent gain. I take it from my broker rather than have it be a numerical multiplication value, because it will be a little bit less accurate, of course. Minus, of course, there is some change value here because of the decimal point that's put in here. I won't be able to get it directly perfect unless I had, 8 decimal places that were put into this. But of course, for me, it's close enough. The general idea, honestly, I don't even really need this column here. I mainly focus on the wins and losses, the RR, and of course, the total account gain. It is not the most complex journal to understand. To be honest, it is quite easy. But the importance of journaling is just that long-term view of your overall trading data. As you guys know, if you follow my journey closely on YouTube, you'll see that August, for example, in 2025 was an actual negative month for me. It was one of my first negative months of the entire year, actually since 2024. In about May or June, I had a negative month. And for some traders, especially those who aren't as confident in their trading strategy, they may start getting flustered, they may start changing their plan or adding new rules. Being able to take that deep step back and look at my trades and say, okay, did I do anything wrong in August, or was it just a bad month probabilistically speaking? Removing those psychological effects and having that long-term view is absolutely crucial and one of the main reasons why journaling is mandatory. I always recommend to traders, especially those in my community, go over your live trading journal once a month, review the trades that you took, make sure they mimic something that you took in backtesting that showed profitable data, even compare it to the number of trades. I think that number of trades is so crucial. And for many traders, it's going to be your first sign that you are doing something differently than you may have done in backtesting profitably. If I have a backtesting sheet of data where I averaged, for example, 35 trades a month, but I come onto my live account and I see maybe I have 15 here, maybe I have 11 here, then clearly there is a difference in your trading, and many times it's psychologically made. For example, someone who is fearful of the markets or afraid to put their live capital at risk will end up with those significantly lower values compared to their backtesting that's profitable. And on the flip side of things as well, I've seen traders where their backtesting was very profitable and they had about 10 to 15 trades a month, and then they get on a live account and they start taking 20 to 30 trades a month. This shows a lot of that eagerness. Some people really want to make that live capital and money as quick as possible. But if you're taking those increased amount of trades, of course it means that you're limiting the quality of them to get more of them, meaning that once again you have fallen off of your trading plan, as we say. So it is important to keep yourself in check as a trader, and a journal is the best way to do that. I promise for those of you watching out there who are lacking consistency in your trading, if you are not journaling every single trade, this is fundamentally the exact reason why. Now, without further ado, we're going to hop over to a case study from one of my students. Him and I were talking this morning, and one of the main reasons being is he had a really great H1 or half one of the year. Q1 is a quarter, H1 is a half. He had a really great H1 this year and then followed by a really negative H2, as can be seen by the equity curve here. And to me, this is a major red flag and very clear. And this is why journaling is once again so important. Without this even being my trades or my journal, I can understand that, okay, clearly he was trading very well and profitably in the beginning half of the year. Clearly something changed in that half of the year that led to a negative result. So essentially the main goal here is understanding we can look into this consolidation area and find a possible reason. Maybe he started taking more or less trades. Maybe he went on a vacation. You know, there's a lot of reasons why this could have occurred, but that's what the journal is going to tell us here. So one of the first things that I noticed here right away was, of course, he mentioned to me that February was only a half month. He started this journal halfway through February, so we can essentially cancel this month out as an outlier. However, I noticed that every sequential month here gained and gained and gained in the total amount of trades, showing me that he was definitely in that category we talked about, where he may have been getting more and more eager or overly comfortable with his trading plan and then started taking less and less quality trades. Now, there's actually a graphic that he had sent me, and this one shows the percent per month as well as the trades taken. As we talked about, we can see that clear increase month over month over month, and then kind of plateauing around that 27 to 37 range here. Of course, understanding that his most profitable half of the year was this beginning half, it tells me that clearly he was taking a lot higher quality trades here, and then as the year went on, he began taking lower quality trades for higher repetitions. And if we end up taking the average of the amount of trades from H1 to H2, it is significantly different, almost double, which of course, as we talked about, means that something changed in his trading, and this is what we call falling off of plan. Now, the next thing I did was go over to the equity curve, and as I talked about, he kind of stagnated in this range here, right around that 15% level. He had a really good beginning half of the year up until that area, stagnated, and then went and fell off pretty heavily. So what I did is I said, okay, he stagnated around that 15%. Let's go across here and find the exact point that that 15% begins at. And it looks to be at about value 73, as you can see there in the little pop-up. So I came back over here, and the first thing I noticed was that 72 was the exact day that he started his live trading account. He actually took some money of his own and put it aside into a live trading account. And right when he started that account is when he started stagnating and having negative results. So not only is that psychology now at play because real capital is on the line, but we can see it very clearly led him to changing his strategy in the way he traded, because suddenly he started taking months with significantly more trades, once again probably being a little bit of that eagerness we talked about, where now that real money's on the line and real money can be made, I'm going to take more and more trades. Not understanding that that essentially had him fall off his trading plan and lose that consistency that he had. Now, I show this part obviously because as a coach, it is my job to look at a journal and help a student identify these things. But for those of you out there not in the community and don't have me over your shoulder, this is something that you have to be able to do for yourself, and it's super important to have a journal to do so. Of course, there's many of you out there in the same boat where you may be lacking consistency, and I think having a journal to look back on and really look at the data and draw conclusions like this is going to be massively beneficial for you. I hope you guys gain some value from this video and really can look at your journal from my perspective now. For those of you that are not journaling, shoot me a DM. I'll send you my exact document and you can start from there. And if there's some of you out there watching who are curious and lacking consistency as well, send me over your live trading journal. I'll take a look at it the same way I did here. I hope you guys appreciated the video today. If you did, like down below, subscribe to the channel. We have videos that come out every single Monday. If not already, feel free to check out our website if you're interested in joining the community, and I will see you guys in next week's video.